The November employment data is out, and guess what? It's looking more solid than a triple shot espresso on a Monday morning. While many were bracing for a downturn, the numbers reveal a surprising resilience in the job market. So let's break it all down. What's happening, why it matters, and what it could mean for your wallet. First up, the big headline. The US added insert-specific number jobs in November, defying expectations. Economists were predicting a slowdown, but apparently the economy said, "Not today, buddy." Unemployment held steady at insert percentage, showing that people are not only finding jobs, but also holding on to them. That's like winning the lottery twice. First, you get a job, and then you don't have to update your resume every 2 weeks. The sectors driving this growth are diverse, which is a good sign. Healthcare, tech, and even construction showed strong gains. Let's take a closer look at each. Healthcare continues to expand because, well, people need doctors. No surprises there. Construction's growth might seem odd given the rising interest rates, but it seems Americans are still finding ways to build things. Perhaps digging extra basements to store their avocado toast funds. And tech? It's back. After a year of layoffs and streamlining, it seems like tech companies are hiring again. Maybe they realized that AI can't do everything, like fixing the Wi-Fi when it inevitably crashes. But let's not get ahead of ourselves. While the numbers are positive, there are still challenges lurking in the background. Inflation is cooling, but it hasn't packed its bags and left the building yet. Wages are growing, but not as fast as the cost of, well, pretty much everything. It's like getting a raise and immediately handing it over to your grocery store cashier for that overpriced carton of eggs. One of the key takeaways from this data is how the Fed might react. Jerome Powell and his team have been laser-focused on balancing the economy, like a tightrope walker with a broken umbrella. Will these strong employment numbers encourage them to keep rates high, or could we see a pause in hikes? Investors and borrowers are waiting for that answer like it's the next season of their favorite Netflix show. It's also worth noting how regional differences are playing a role. Coastal states like California and New York are showing slower job growth compared to their Midwestern and Southern counterparts. It's almost as if the Midwest is saying, "Hey, we've got jobs and affordable housing. Come on over." Meanwhile, coastal cities are like, "Sure, we have jobs, but enjoy paying $5,000 a month for a one-bedroom apartment with character." For individuals, this is a mixed bag. On one hand, job opportunities are still out there, and unemployment remains low. On the other hand, real wage growth is limited, and people are having to work harder to stretch their dollars. It's like running on a treadmill. You're moving, but are you really getting anywhere? Now, let's talk about what this all means for you. If you're a job seeker, it's a good time to polish that resume and start applying. Employers are still hiring, and the competition isn't as fierce as it might be during a recession. For workers, this might be a good time to negotiate for better pay or benefits, especially in industries showing robust growth. For investors, these numbers suggest that the economy is in a stable place, at least for now. The stock market likes resilience, and strong employment data often signals consumer confidence. But remember, the market can be as unpredictable as a toddler on a sugar rush, so tread carefully. Looking ahead, the big question is sustainability. Can this resilience continue into 2024? The holiday shopping season will provide some clues. If consumers keep spending, it could fuel further job growth. But if spending slows, it might indicate that the resilience we're seeing is more of a short-term bounce than a long-term trend. So, what's the takeaway here? The November employment data paints a picture of an economy that's holding its ground despite challenges. It's not perfect, there are still cracks in the foundation, but it's far from the doom and gloom that some were predicting. It's like watching a rom-com where the couple argues the whole time, but still ends up together. Imperfect, but it works. Thanks for tuning in. If you found this breakdown helpful, or at least mildly entertaining, don't forget to like this video and subscribe for more updates on the economy, markets, and all the stuff that keeps your wallet happy. Drop a comment below. What's your take on this resilience? Are we in for smooth sailing, Or do you think storm clouds are on the horizon? Let's chat. And remember, whether you're job hunting, investing, or just trying to figure out how to budget for the holidays, keep going. The numbers might fluctuate, but your resilience is what truly matters. See you next time.